Well, I think first question I would ask is, what am I actually trying to achieve by trading? Is it an additional income? Is it my full income? Is it just a bit of fun? What am I actually generally trying to achieve from trading? And I think from that perspective, you can fit that into your lifestyle, you can fit that into your personality, and those sort of traits will dictate what that is. If you've got a lot more time on your hands, you might be able to trade much more actively than someone who doesn't have a lot of time on their hands and may have a second job, in which case you might want to trade off daily charts, for example, whereas someone who is doing this professionally can look at scalping markets and being much more active in the market. So personality and lifestyle will dictate what you're trying to do and what you're trying to achieve with that side of things. I think understanding risk management and money management is absolutely essential. Where do I take my loss? Do I want to put a stop loss? I would always advise that we do. Do you want to trade with a profit target? In a lot of the cases, if you're a trend follower, for example, you wouldn't use a profit target. In fact, you might even try and add to the position to try and building up winning trades. If something in life is working, do more of it. If something in life is not working, you do less of it. And I think that's exactly what you should be doing in the market. If your trade is working, why not add to the trade rather than try and take profits too early, which of course is what you see from a lot of retail clients. So I think all those combinations really roll into the crux of what you're trying to achieve and how you achieve it. And then of course is experience as well, and experience will come through. So my advice is, when you are starting out, start small. And when you feel that you're a lot more confident in this markets and you've got a really clear structure, you can really start looking at those big positions. Well, of course, everyone's going to say open a demo account to start with. The negative situation with a demo account, and I think demo accounts are good in understanding the mechanics of the trade, understanding the calculations, but what it doesn't do is it doesn't give you the emotion. The emotion is the absolute #1 killer why people's trading plans go belly up, effectively. People will lose discipline, they'll start acting irrationally when you've got very hyper volatile markets. You lose your control, and any kind of trading plan can be unwound very, very quickly. So how you manage those emotions is absolutely key. I mean, we get people going to see trading psychologists as a result, and I think that's not a bad way to look at things, to be honest. It's how you can control that emotion when you're in the trade that is so important. Even the best trading plans just become unwound. So for me, I've got this strategy which I adhere to, but it's about trying to change your idea instead of taking that profit too early. You've got to be thinking, I go into a trade thinking, how can I add to the trade? If the trade's working out, if it breaks a key level and it closes above a key level, Fibonacci or a swing high, can I add to the trade? Can I constantly be looking to do that? If my analysis is right, why not continue doing more of it? To get to a point where you're really happy, I think takes a long time. I mean, people call it the Holy Grail. People are always tweaking things and playing around with bits and pieces. And this is why I say, until you've got a point where you feel really happy and really comfortable, keep position sizing as low as you possibly can until you feel you're really comfortable with how you're going. And that's the way you want to take it going forward. But I don't think anyone's ever really fully comfortable until they've got a strategy which they've either back-tested over a long period of time or they've been using for a period of time and using fairly successfully over multiple cycles. But I will say, once you actually get to that point when you're analysing markets and you're seeing the fruits of your labour playing out, it's brilliant, it's fascinating, and it's a lot of fun. But there will be days where things are really quite painful, and it's how you manage that process, how you manage what we call a period of drawdown, where the market doesn't do what you want and your account's not doing what you want to do. It's how you manage that and how you adapt your trading plan as a result of that. Will you tweak it? I mean, you may have a successful plan and then you go for a market cycle which you haven't taken into consideration, and how you change your plan as a result of that can be detrimental to your future objectives.